Good evening, everyone. Time for another silver update. This is the weekly chart of silver provided by netdania.com. You can click on the link below. You can see on the silver chart here that we've got the cross that I was looking for on the MACD. If you followed the MACD as long as I have, and it's just one of those things that you get a feel for, but when you get what I call a healthy cross of the MACD, and that's one that kind of rounds. This one here is sort of one. It's a little too sharp. This one here is a good one as well. This one is a bad round of the MACD cross. The one we're currently at is actually a very, very healthy cross of the MACD. You can see we've crossed over or rising. So probably more than anything else, it looks like this cross or this cross. So I'm expecting a very strong rally in silver. We're probably going to get the big moves after this has defined itself and is clear that it's moving up. But I want to jump over to one of the stories of the night, and that's going to be Priceline. That's a stock that I've covered in the past. I'm going to go ahead and play you the video about it so you can see what I was saying at the time. It's actually back in April of this year. You can see Priceline took an enormous drop today. I don't even know. It's 100+ points. And I'm going to take you to the video that I did at the time to remind you of what I was saying. And we're going to jump back in. So let's just go ahead and play that. Now, I wanted to take you to the main story of the night. And that's going to be how Wall Street loots Main Street. I think the famous saying is that the stock market is basically a transfer of wealth from Main Street to Wall Street. Now, I wanted to use this Priceline stock to demonstrate that. We're on the monthly chart. If you remember in the .com situation, you can see here on the chart that Priceline actually ran up to almost $950 a share, subsequently crashing down to about $6 a share. And now Priceline has run up again to nearly $800 a share from that low of $6. So this is a very interesting stock because they're actually doing the same thing again. And I'm going to show you how the looting works. So let's go over to Priceline, and you can see this is the chart that we were looking at with NetDania. This is on Yahoo. The first thing we want to look at is the insider transactions. When we look at the insider transactions, you need to understand how the option writing game works on Wall Street. Basically, Wall Street rewards insiders through options, and this is a list of the sales of stock options and how they work. The main thing you have to keep in mind is that you can just look for any number of sales here. We're going to concentrate on the CEO here, which is Jeffrey Boyd. And what they do basically is they exercise their options at a low price. They're awarded these options as a part of their employment contract. You can see here, and now this goes back to May of 2010. So we're looking at roughly a 2-year period of the option transactions by this Jeffrey H. Boyd. And you can see here that we have an option exercise at $20. And the way you identify these is you can compare them with the number. They're not always exact, but you've got a good one here. You've got May 11th of 2010 where Jeffrey Boyd exercised 105,556 at $20 to $30, and then he sold at $500 to $531. So essentially we're talking about a net gain of about $500 a share. Now you can see the proceeds on this sale was $55 million. So I've added this up earlier, and over the course of just this period, this CEO has sold approximately $140 million worth of stock. He paid just a small percentage of that, so we're probably talking about a net of roughly $120 to $130 million. So here is this is just one person. This is a CEO, and you can see he still has 211,000 shares outstanding. So he's still got some selling to do, but he's done some major selling in the past. And he's unloaded his shares, which the company gave him essentially for free, and he's made about $130 million gain on that. Now, what's interesting is when we go over and look at the major holders, if you click on the list of major holders, this will give you, this is also required to be reported by the SEC. So I'm not going to fault the SEC in this because all of this is public information and the public continues to participate. So you can see here, here's your top institutional holders of this Priceline stock. Now, what's really telling is here are your top three with 9%, 4.5%, and 4%. So you're talking about nearly a fifth to a quarter of all of the stock of this company is owned by T. Rowe Price, Fidelity, and Vanguard. Now, what are those companies? Those are the companies that manage your 401k retirement. You can see them down here under top mutual fund holders. So what is going on here is that the U.S. government, via the 401k laws, which rewards employers and employees for investing in stocks, primarily most of these plans allow you to invest in stocks, and they match and they encourage you to invest in these. So the retirements of the people who have their monies in T. Rowe Price, Fidelity, and Vanguard, they are taking their retirement monies and purchasing the shares of Priceline, and then they are being unloaded upon by the insiders of the company, who are taking, as I showed you, just this one person has taken $150 million, $130 to $150 million roughly. If you add the others in, you'd probably come to $500 million or $1 billion. Now, if you look at the company, you can see that the market cap of this company right now is about $36 billion. But if you go all the way back to the bottom where it was roughly $6 in price, that's going to be 1/100th. So you're really talking about a $300 million company. So through the price appreciation of your retirement funds and the investment companies that invest your retirement funds, that has enabled the insiders on Wall Street to transfer the wealth of your retirement to themselves through stock options. That's how the game works. That's how it's always worked. That's what happened here when the stock fell from nearly $1,000 all the way down to $6. It's going to happen again, and there's no reason it shouldn't happen again because people have never learned the lesson. So if you have your 401k invested in stocks and you don't really know what stocks you're investing in, but you're just allowing a mutual fund to invest your money, you're actually a participant and an enabler of this system where they transfer your retirement wealth to the insiders of these companies. So, okay, so that's the summary that I did back on April 11th of 2012. You can see back then the price was $7.29. You saw it on the screen there. We're now at $5.62, and Priceline's taken a huge bath. In my opinion, it's only going to get worse. We're going to see that sort of a move. Now, real quick, just to pull up one that's happened that I covered before, that's going to be Green Mountain Coffee Roasters. Green Mountain Coffee Roasters was one of those bubble stocks. You can see this is what Priceline is going to do. Probably the most egregious of these is going to be Research in Motion. This is, sorry, I typed that wrong. This is the maker of the BlackBerry, and this company has actually, more than any other company, they've actually pulled this deal 3 times. Back in the dot-com boom, they ran it from roughly 7 to 160 and crashed it. This is a mini boom there. They ran it again here and crashed it. They ran it again there, crashed, and so I don't even know how many times. You can see we're down to $7. So that's the game they play. They do it over and over and over again, and they loot the money from the retirements. So I don't have any more time for that. Now I wanted to take you over to the blog. There's a lot of stories that I'm covering, and the questions of the night, I wanted to get to those real quick. I have to race through those. This is from Parabola. And he says, hello, Brother John, the periodic table. First, let me thank you for all that you have done so far. I've been following your videos for a long time, been a silent reader of your forums for quite a while. I signed up on your forums today because I wanted to know your thoughts on a question I had. I was browsing the periodic table today. That's not too many people browse the periodic table. And I wondered something. On the table, platinum is right next to gold, and it is very similar in price in the markets. Likewise, nickel is right next to copper, is very similar in price. Now my question is, if palladium is right next to silver, why is there such a huge price difference between the two? Shouldn't the price of silver be close to palladium like nickel is to copper, platinum is to gold? Or am I just way off base here? Just wondering. I'd be interested in your thoughts. Thanks and take care. Okay. Well, pretty much you're off base. Now let me try to explain why. We've got the periodic table here, and this is the table of the elements. You can see you got palladium and silver here. You've got gold and platinum there. So, but what is this representing? So to summarize real quick, the periodic table is a table that's of the chemical elements. It's organized on the basis of their atomic numbers. So to understand the organization of this table, you need to understand what the atomic number is. In chemistry and physics, the atomic number, also known as the proton number, is the number of protons found in the nucleus of an atom. So that's going to determine your atomic weight, is the protons. Now, the way it gets complex here is when you add in the neutrons. And therefore, identical to the charge number of the nucleus, it is conventionally represented with the symbol Z. The atomic number uniquely identifies a chemical element in an atom of neutral charge. The atomic number is equal to the number of electrons. So your protons and electrons are equal. The atomic number Z should not be confused with the mass number. Okay, now this is the number that's going to give you your mass. This is the weight, the density, how heavy that is when you hold that coin in your hand. Why is that gold eagle half the size of that silver eagle, but they weigh about the same? That's the mass number, which is the number of nucleons, the total number of protons and neutrons. So that's going to be your explanation, and that table is going to be based on that atomic number. So now the question is about why these the value of copper and nickel, the value of platinum and gold, that is a coincidence. Now the issue is going to be rarity. The platinum and the palladium and rhodium, and there's one other, those are the palladium group of metals, or I'm sorry, those are the platinum group. They're all in the same, they look the same. They're a dark silver, but there's 4 of them and they're very rare. Then you have gold and you have silver. So traditionally, gold and silver are money. The platinum group of metals does not fit into that. They're too rare. So that's going to go into an FOFOA type of explanation. Why gold is money? It's rare, but it's not that rare. Why is silver money? It's not nearly as rare, but it's not that rare. So it's a hard explanation to understand, but gold and silver are money, and I don't expect you to take my word for it, but I'll link all these and you can research them to understand that. So let's get back to the next question, and that's going to be Bitcoins. And I dread this one, but I need to cover it. This is from George Silver. Dear Brother John, with Bitcoins being the ultimate, so far, anonymous money system, why does any illegal operation use anything else? If you want to launder drug money, then use Bitcoins. If you want to transfer your funds to another country, then use Bitcoins. If you want to buy and sell arms, use Bitcoins. Surely the CIA, the MI6, the Mafia must be the biggest users of Bitcoins. If not, why not? In fact, the question should be really who started Bitcoins, the CIA or the MI6? Could there be a ghost in the system that enables these organizations to trace people using Bitcoin? Sorry, I'll get my tinfoil hat. So first answer, no. The Bitcoin market is not large enough. Again, you have 21 million, only about half that's been issued. They're about $10. 10 million times that was 100 million. It's not a big enough market to do what you're talking about. If you go back into my video that's talking about the drug trade, you can see the UN document about the drug trade. We're talking about hundreds of billions of dollars. So obviously that's not the case. The second point, launder. When you launder money, you're changing dollars for dollars. So you're cleaning the money. You're putting it through a washer. You're making it legitimate. It's not possible to launder money through Bitcoins because you're transferring dollars to Bitcoins, Bitcoins to dollars. There's no laundry there. You'll have to research it to understand it, but that's simply not the case. And then, of course, is the CIA, the MI6, all these intelligence agencies behind Bitcoin, and is there a ghost in the system that allows them to track using Bitcoins? I don't know. I suppose there could be, but again, it's anonymous. And if you go to Mt. Gox, you can see that you're not allowed to access it from the Tor network, etc. The Know Your Customer rules are in place. So it seems to me it's pretty clear that the system is legit, and that for that reason it's being highly regulated. And it is in fact highly regulated. But the reason why it's not a big issue is because you're transferring your money into something that's not money. Bitcoins aren't money. Now, as soon as they admit they are money, well, then the game changes. But up to this point, they're trying to convince you that they're not money. So hopefully that makes that clear. And the last question, is society awake but not aware but not awake? Brother John, my grandfather used to be a toll collector for the Garden State Parkway in New Jersey in the 60s and 70s. When the coins were changed in 1965, he knew that this was a form of dilution of the money supply, would keep the silver back quarters and throw the diluted money in the till. Now realistically, that was not that long ago. How have our older citizens done a disservice to the younger generation by not complaining more? Then are we to blame for letting the charade continue without mass protest? This is a rod of evil. If we had sound money, we could not go to war nilly-willy nor pay for some knucklehead to see why a golden-cheeked warbler is endangered. Is society aware but not awake? No, society is not aware and society is not awake. The people that are in charge now, these are the people that were running around smoking pot and listening to rock music, and these are the baby boomers, and they arguably, now I'm not going to argue conspiracy theory here, but compare the different generations, but arguably this generation has gone from the most idealistic and pure to the most corrupt and distorted or cynical. So it's clear that the 60s generation has failed whatever their earlier morale was. They've clearly failed that, and they've become the exact opposite of what they fought against. Maybe that was the plan from the beginning. So let's go over to Silver Doctors real quick. Like I said, now I want to talk about the blog. I had the blog channel up initially, but let's go to the blog. I'd like to do 2 or 3 or 4 or 5 videos a day. I simply don't have the time. I'm working the equivalent of 3 jobs. So I really do appreciate those like Da Vinci who are sending me Bitcoins, people who are donating via PayPal, people who are clicking on the advertisers. It really does make a difference if you support the channel. I know I don't like to beat the drum and beg for people to support me, but I'm a little bit overworked and I'd like to do this full time. If I could do this full time, then I would be able to produce a lot more. So end of that sermon. Now let me close this out here. This article is about the Indian finance minister, and if you've been following this story, this is on Silver Doctors. If you've been following this story, the Indian government is very upset about the fact that the Indian people continue to invest in gold. You can see on my blog the picture of the woman with gold on her. That's just a tradition in India, and I don't think they have any chance of breaking that. But my suggestion to the Indian government, if they would like to discourage the tendency of the Indian citizens to invest in gold, hard assets, etc., then it's very easy to do. We did it here in the United States. Go ahead and raise the interest rate on your paper currencies, or paper investments, to around 20% for short-term rates and long-term rates, and pay people about 1/5 of what they invest every year. And I'm sure that a lot of those people, if you had a stable currency, would be very delighted to invest in your currency and your bonds for just to get back paper. So to be perfectly honest, if you're not interested in raising your rates that high, then you probably need to shut your mouth. Now, the next story is that I want to cover is the Jeffrey Christian story. This was broken by Silver Doctors, and this is Jeffrey Christian coming out, and he's poo-pooing the fact that there is silver manipulation, and the doc did a great job of documenting J.P. Morgan's involvement in the manipulation. Pretty much Jeffrey Christian, if you remember Jeffrey Christian, he's the guy that basically slipped and admitted that there was a 100-to-1 ratio of the precious metals to paper, or paper to the precious metals, and got in big trouble for that. This is another John Nadler, whatever his name is. This is basically a fox in the chicken coop. This is a guy who claims to represent the metals but really does nothing but represent the powers that be. So go ahead and read that article on Silver Doctors. He does a great job of exposing Jeffrey Christian, and I just don't have time to go through it. I'll go ahead and link that. Last thing I wanted to cover is an article that was on Zero Hedge, and I'm going to go ahead and read this because it's so important. This is Jim Quinn of the Burning Platform, and the only thing I can say about him is he's right on. So I'll go ahead and read this. This is just a portion of it. I suggest you read the entire thing yourself. The truth is that human beings cannot be trusted to do the right thing. We are weak and susceptible to irrational and short-term thinking that now imperil our entire economic system. Did the gold standard prevent booms and busts prior to 1913? No. Since we are human, booms and busts cannot be prevented. Did the gold standard prevent politicians and bankers from making foolish, self-serving, short-term decisions that would have long-term negative consequences? Yes. A currency backed by nothing but the hollow promises of liars, swindlers, and racketeers is destined to fail. Gold functioned as an alarm bell that revealed the machinations and frauds of politicians and bankers. It can be trusted because it has no ulterior motives, no ego, no desire to be loved, and no plans to run for re-election. It is an inconvenient check on do-gooders, warmongers, inflationists, and Keynesians. That is why it will never be embraced by either party, that would be Obama, or any central banker. It is too truthful. Kindleberger's fears regarding the moral hazard of rescuing those who have taken excessive risk have been fully realized 10 times over. The maestro, Alan Greenspan, should have his picture next to the term moral hazard in the dictionary. His entire reign as savior of the American crony capitalism was marked by his intervention in markets to protect his bosses on Wall Street. His solution to every crisis was to lower interest rates and to print mo money. 1987 crash, savings and loan crisis, Gulf War, Mexican crisis, Asian crisis, LTCM, Y2K, bursting of the internet bubble, 9/11. The Greenspan put guaranteed the Federal Reserve would always come to the rescue with unlimited liquidity to prop up stock prices. Investors increasingly believed that in a crisis or downturn, the Fed would step in and inject liquidity until the problem got better. Invariably, the Fed did so each time, and the perception became firmly embedded in an asset pricing in the form of higher valuations, narrower credit spreads, and excessive risk taking. The privatizing of profits and socialization of losses continued and accelerated under Bernanke. These helicopter twins talked a good game, but their game plan only had one play: print money. Those Ivy League educations have proven to be invaluable. The Federal Reserve's last shred of credibility and illusion of independence has been obliterated by their increasingly blatant backstopping of recklessly criminal Wall Street banks and secretive machinations with Washington politicians and foreign central bankers. Bernanke has lied to the American public, encouraged accounting fraud by Wall Street banks, overstepped his legal authority in purchasing toxic assets from Wall Street banks, has been involved in the manipulation of LIBOR, has screwed senior citizens and all savers with his zero interest rate policy, and used quantitative easing as a method to enrich Wall Street at the expense of the general public that bear the heaviest burden of higher food and energy prices. The Bernanke put is the only thing keeping a clearly overvalued stock market from crashing today, but delaying the inevitable through easy money policies will only exacerbate the pain of the ultimate crash. Bernanke is caught in a liquidity trap, and one of his own and his weapon of choice is shooting blanks. Bernanke, along with his banker and politician cronies, have crossed the line of lawlessness in their futile efforts to retain their power and wealth. Jesse eloquently describes how a few evil men have captured our economic and political system. Quote, "The Fed is now engaged in a control fraud and what appears to be racketeering in conjunction with a few big investment banks. They have entered into it with good intentions, but they seem to have been turned towards deceit and corruption. This is not an historical event, but an ongoing theft in conjunction with a number of Wall Street banks and politicians whom they have paid off through a corrupt system of campaign financing and influence peddling. This is nothing new in history if one reads the unsanitized version, but people never think it can happen today. That somehow yesterday things were different, as if one looking at some distant foreign land. This is a facet of the illusion of general progress. We're now in the cover-up stage of a scandal similar to Watergate, when the White House was stonewalling. The difference is that the corruption and capture of the government is much more pervasive now and includes a significant portion of the mainstream media. So meaningful, I got a comment there, as if the Washington Post was not, that's ridiculous. Anyway. So meaningful reform is difficult. Most of what has transpired so far has been designed to distract and placate the people in their righteous anger. The Fed deceives the Congress, and the public turns a blind eye to glaring conflicts of interest and is essentially debasing the currency while transferring the wealth of the nation to their cronies. And still the regulators do not enforce the laws they have, and Washington drags its feet while accepting buckets of cash from the perpetrators. Jesse. Putting our trust and faith in a few unelected bureaucrats and bankers who use their obscene wealth to buy off politicians in writing the laws and regulations to favor them has proved to be a death knell for our country. The captured mainstream media proclaims these men to be heroes and saviors of the world when they are truly villains in this episode. These are the men who unleashed the frenzy of Wall Street greed and pillaging by repealing Glass-Steagall
blocking Brooksley Born's efforts to regulate derivatives, encouraging mortgage fraud, not enforcing existing regulations, and creating speculative bubbles through excessively low interest rates, and making it known that they would bail out recklessness. They had created an overly complex, tangled financial system so they could peddle propaganda to the math-challenged American public without fear of being caught in their web of lies. Big government, big banks, and big legislation like Dodd-Frank and Obamacare are designed to benefit the few at the expense of the many. The system has been captured by a plutocracy of self-serving men. They don't care about you or your children. We are only given 80 years or so on this earth, and our purpose should be to sustain our economic and political system in a balanced way so our children and their children have a chance at a decent life. Do you trust that this is the purpose of those in power today? Should we trust the jackals and grifters who got us into this mess to get us out? This concludes part 2 of the series. So, excellent. I didn't read the whole thing. Jim Quinn from The Burning Platform, A Matter of Trust. So, incredible commentary. I'm running out of time. So, back to the charts. The silver chart and the gold chart, we're turning up. We're clearly turning up on the MACD on gold, the MACD on silver. This thing is far from over, as Greg Manarino points out. We've crossed the X. We're doing another X crossing here, and it's only going to be up from this point. And we'll talk to you next time.